Hello, everyone. Hi, welcome to today's webinar. Thank you all for joining. I'm Yoshi. Been working on working at Beehive for over 2 years now on a product team as a product analyst, and I'm joined by my colleague here, Jason. Jason, would you like to give an intro?
Yeah, thanks, Yoshi. Yeah, good afternoon, everyone. I'm Jason. I head up product at Beehive. Been at Beehive for just over 6 years now, and I'm involved in all the essentially most new things at Beehive. So anything that goes from the new product that we're launching in the market to a new development that we put out onto our platform. And yeah, happy to be here talking to you guys this afternoon.
Great, thanks, Jason. Yeah, so guys, let's dive into Beehive's journey. So some of you might know about Beehive already, but for those that don't, Jason, would you like to give a brief intro about Beehive and what Beehive has been doing till today?
Yeah, for sure. So for those that don't know much about Beehive and the journey to date, so Beehive has been around since 2014. 2014, primarily acting as a traditional peer-to-peer lender in the SME space. So what peer-to-peer means in this scenario is we act as almost the middleman connecting SMEs on one side looking for finance, cheap, fast finance, and then you've got on the other side you've got our investor base, and the investor base is where we get our money to then push on to the SMEs. Beehive's job, like I mentioned before, is to connect both parties together, bring them together, and we do that over our crowdfunding platform. So it's our job to go out and find these creditworthy SMEs that are looking for finance. And we then, once we've completed our assessments and we've said that the credit is good to go and we've done all our KYC, KYB checks, we list them onto our platform and they then get funded by our investor base. Like I mentioned, we've been around since 2014. We started in the UAE. We've since expanded into Saudi and Oman. Saudi was in 2020, so just around COVID time, and then Oman more recently in 2022. But we're primarily based in the UAE. In the last kind of big news in the last 12 months from our perspective is we've gone through our acquisition from with Ian. So we've recently been a majority acquired by Ian, which has been an amazing step for us as a business, kind of taking it from where we were as a traditional peer-to-peer lender to hopefully something a lot greater where we can tackle a much larger chunk of the market, and using the brand and influence of Ian is something that we're incredibly excited by. So yeah, without kind of going into too much detail about Beehive's journey to date, hopefully that gives everyone a bit of a background around Beehive. Just before going into the next section, I think what's in, I guess, a couple key things to point out as well from Beehive is that we are Sharia compliant lender. So we offer both Sharia and conventional finance. It doesn't mean that we have to do one or the other, but we have the option of doing both. And then the products that we've had to date have been primarily targeted at a certain type of SME. So an SME that we believe is being relatively well established. So, and as a result, we've been able to keep our defaults in the region to below 2%, which is market leading in the space. So that's something that we're very, very proud of. And yeah, hopefully as time goes on, we continue to make steps forward into the region's SME space to create more and more of a positive impact.
Great, thanks, Jason. Thanks for that. Hopefully everyone now understands Beehive a bit more. So let's dive in now to the topic of today's discussion, which is microfinance. So Jason, could you give us an intro about what microfinance is exactly?
Yep. So as I kind of touched on before, the way that Beehive has operated has been primarily targeting at established SMEs. And what that means is that whilst we're targeting what we determine it, or what we term as established SMEs, it does mean that there are a large portion of the SME market that potentially goes unserved by Beehive's traditional or legacy product range. And I guess the the natural evolution for us now that we are working with, well, partnered with EAND, and we want to target as many SMEs as possible, is, well, what product can we bring to the market that targets a lower revenue base, a clientele that's looking for, maybe doesn't necessarily need to take a larger sum of finance, but a client that is looking for something that can help them through a relatively short-term working capital cycle, and something that is accessible. I think that's the main thing. And what we term micro-term finance is a product that is designed exactly for that. So it's for any type of SME, really. So we are sector agnostic in the sense that we will go, excuse me, we will lend to almost any sector. There are some high risk sectors that we don't necessarily touch, but almost all sectors are open for us with this product. The key thing, or I guess the key aspect to this product, is the fact that it is short term. So, and the loan amount is small. So we cap the maximum loan amount at 100,000. That is something that we are open to the long term slightly increasing, but it will always be a relatively small product that we offer. And then the tenor is also shorter than is short and designed for a short-term turnaround. So we cap that at 4 months as well. So the way that the product is normally structured is, we'll say, okay, borrow 100,000 today, repay that in equal monthly installments over 4 months. And the fee that we will charge will be, we don't have an upfront fee. We don't necessarily have a interest calculation that we use. We just use a factor. So we say, okay, we lend at a 1.1 factor. So borrow 100, repay 110 over 4 months, and then you can kind of, once you've signed up once, the idea is that because you've done all your sign up at the beginning, that can then be reutilized multiple times throughout the year, and hopefully the application process is relatively smooth. And the purpose of funds, like we said, so the idea here is, whilst microfinance is I guess the main use case for microfinance is exactly what I said before, which is, how can we support SMEs to be able to address short-term finance gaps that they have in their business? That could be to buy suppliers, that could be for marketing, that could be for a hire. But what can we do to make finance accessible to a smaller type of SME, and for a smaller finance requirement as well? And that's very much the purpose of this product, to come in to make our product as accessible to the market as possible, and support SMEs that are looking for a slightly smaller finance amount over a shorter tenor to support them in their short-term cash flow needs.
Yeah, great. Thanks for that. That was really helpful. So we touched about the microfinance, how Beehive is looking to launch that, and how is it different to the existing products that Beehive already have?
Yep. So kind of as I alluded to before, our current product range is, so we have 2 flagship products. So we have our term finance product, and we have our working capital finance product, both of which are the 2 products that we've kind of operated since the beginning. And the way that we I guess view them differently to microfinance is more about its accessibility. So whilst term finance and working capital finance are 2 accessible products to a certain type of SME, what we want to do with microfinance is make a product to be, or I guess make a product that is as accessible to the vast majority of SMEs as possible. And the way that we do that with microfinance is, like I said, is by coming in at a slightly different angle, and saying that we're going to offer a slightly lower finance amount, a lower tenor. The repayment cycle is, there's no upfront fee. The requirements which I think we'll touch on next, the application process is slightly different. So I think that's very much a way that it is different, in terms of it just at the core is targeted at a very different type of SME for a slightly different funding requirement. Term finance working capital is more of a long-term funding requirement, whereas the microfinance product is something that hopefully can address the short-term funding needs of an SME that maybe might not qualify for the other products that we currently have.
Yeah, great. So if I was a business coming to Beehive, could you walk us through the process of how a
Yep.
microfinance application would work?
Yeah, for sure. So, so in general, we do try to make our application process as easy as possible and as straightforward as we can. We are regulated by the DFSA, so we are limited in terms of what we can and cannot do from an onboarding perspective. We do try and ensure that that we make it as easy as possible. But one thing about the microfinance application process that we can control is what we do to look at the business's credit strength. So whilst we'll still ask for our traditional KYC, KYB documentation like trade license, passports, etc., the one key difference in the application process is how much credit documentation you have to submit. We don't even look at the company's financials when we do the application. So what we mainly are trying to do by doing that is again goes back to my original point, which is trying to make it as accessible as possible. So when we first contact the client or the client comes to us, we say, okay, we'll send out the documentation requirements. We'll try and assess you as quickly as possible so that we don't waste the time of the applicant. The applicant can then get a kind of a pre-approval, which is saying, okay, we've had a look at your initial documents, and we think that you are eligible for this amount. Are you guys okay with that? They say yes. We then move on to the full application process where we get the rest of the KYC, KYB documentation. Our internal processing time is max 48 hours. So once all the documentation is in, our actual analysis time is maximum 48 hours. The areas that tend to stretch that slightly is the time to get that documentation in. So we try and support the SMEs as much as we can in submitting that documentation into us. Once we have got all that documentation in, we will then, like I said, process it in 48 hours, send the offer across to the SME. If approved, the SME will then say, yep, okay, I'm happy to go ahead. We then send across an e-contract. We get the contract signed. We get the check signed, because like I touched upon earlier, the way that we do collections is through monthly installments, through post-dated checks. That long-term may change, but currently that's the way that we do it. And then once all the security documentation has been signed and collected, we then go into disbursement, and disbursement takes yeah, I mean, I'd say usually about 24 hours. So internal processing time at Beehive, we maximum we would ever want to get to is the upper end of a week. But you know, we usually average at about 48 to 72 hours, including the disbursement process. So I mean, mostly it's around 48 hours. So that's the general process, and that is kind of version one of the process. We are constantly looking at ways of digitizing that process. It is a new product, so we are looking at new ways that we can take it from version 1 to version 1.1, 1.2 to make that process easier and easier for the SMEs. So this first phase that we're going through is very much about working with SMEs who we are taking along the journey with us and trying to learn through the experiences of the SMEs to say, you know, what part of the process was challenging, what part of the process do we think we need to improve, what aspects of the product do we think we need to improve. And I think that's where we do try and differentiate ourselves, is trying to listen to the market as much as possible and not be rigid in how we provide financial products to the market. And I think hopefully through the evolution of microfinance over the next 6 to 12 months, we do exactly that.
Nice. Yeah, sounds good. So some of the attendees here might have not taken debt before. What comfort can you give to those taking debt for the first time with microfinance?
Yeah, well, I think what, at least whenever I speak to SMEs or anyone trying to understand what the benefit of debt is to their business, it's trying to normalize it to them, and I think a lot of people in the UAE market have heard horror stories about a check bouncing, for example, and being chucked in jail, and the association of to debt can be quite intimidating or even scary. And I think what we try to do at Beehive is try and normalize it and try and make the whole process as friendly and as access and I guess we just want to try and make it as easy as possible for the SME, and we think that through our products, the way that we kind of offer them, the way that we assess the SMEs, we very much will will almost guide you through our credit assessment as to what the finance can and should and shouldn't be used for. I think if you're coming into Beehive and you need finance in the business desperately just to keep your business alive, to pay salaries, the odds are that debt isn't probably the answer to your solutions here. What we try and do is we try and facilitate valid and healthy growth, and I think that's where we try and guide the SMEs is, if you are at this phase in your business and you're trying to take it to there, but you're currently lacking the finance support just to potentially buy the supplies to take you from here to here, that's kind of where we want to step in, and we want to try and help you through that process. And microfinance is a great stepping stone to doing that. We've had SMEs that have taken finance from us at a super early stage in their business, and then years down the line are still taking finance from us, but they've graduated from a 2 million dirham business to a 50 to 80 million dirham business. Those kind of success stories is hopefully what entering into Beehive can get you. And we're always, we're a pretty friendly bunch, so I think we're always keen to answer questions from the clients and from the SMEs that are applying about helping everyone through that process to try and take the intimidating aspect of debt away from the whole process.
Yeah, that's nice. Yeah, that was pretty helpful. Yeah, I've seen in the UAE, banks are not really into this sort of space. Why do you think this area of lending is overlooked by banks in the UAE?
I think the banks, in general, the banks underserve the SME market. So it is, whilst this area is particularly untapped, banks in general avoid the SME market. And I think largely it's down to the history, which is that the banks have been burnt lending to the SME market for in a number of in various different scenarios in the past. And I think one consistent trait in terms of why that consistently happens is because that the banks and then the products themselves aren't necessarily being tailored to the SMEs themselves. They are almost a corporate finance product wrapped in the SME, this SME wrapper almost. And I think, and what that means is that when the product is given or sold to the SMEs, the product is not necessarily for purpose, and the way that they analyze the risk of those applications is also a design for corporate finance and not necessarily SMEs. As an example, banks are fixated on audited financials, whereas we at Beehive aren't necessarily fixated on the same things that banks are. And what that does allow us to do is mitigate risk in a number of ways, but also it means that because we're not fixated on audited financials specifically for this product, that we're able to lend to clients that maybe financially, as per their financials aren't of the eligibility criteria that they would need to qualify for a bank loan. But we can hopefully target that sector with a slightly different criteria. And I think it's the bank's main concern there is just a fear of getting into the SME market because they've been burned so many times before. Like I said before, we've been in this market for 10 years. We have the lowest default for the space we work in, one of the lowest defaults in the region. And I think that's because we know how to analyze risk, and that goes the same for this product as well. And I think it's more just about the banks not necessarily having the right sort of risk assessment tolerance to go into this space. And yeah, I would say that's probably the main reason for it.
Thanks. Yeah. Thanks, Jason, for that. We have some questions actually from the chat. One of the questions was, what kind of follow-up do you do with the businesses after giving out the loan?
So after the loan, nothing. So honestly, I think we often get this from the investor side because they want to try and protect or understand the risk. But I think the way our confidence is in our initial assessment. So when we are performing our initial assessment, one of the big things that we try to to do is not see can they just afford this today, but what is their growth and their cash flow percentage and their debt service coverage potential like over the tenor of that loan, right? So we don't, once we have dispersed cash, obviously our team are in regular contact with the SMEs, and we'll be understanding how the business is going, but we don't ask, we don't do consistent site visits of the site. We don't believe that to be necessary. We haven't found that to be necessary in the 10 years of our operation. Different products, there is more tracking and assessing of the case after disbursement. For the microfinance product in specific, we don't do that. We do all our assessment up front. We assess the risk. We're comfortable. We're not just comfortable with you today. We're comfortable with you for almost you guys moving forward as well. So we think that over the next 4 months, if the tenor is 4 months, we're happy to kind of to leave our assessment up until the point when there is a fresh request that comes in. So let's say we do our assessment today, cash goes out for 4 months, and then after 4 months, the SME comes back saying, actually, I'd like to get a top up, or I'd like to get a new loan. We would do an assessment again then, but during that 4 month, whilst the cash is out, we very much rely on our initial assessment.
Thanks, Jason, for answering that. Another question in the chat is, do Beehive finance all kinds of businesses like the entertainment industry?
Yeah. The only sectors that we will most likely not approve applications for are the high risk sectors. So these are pretty traditional high risk sectors: oil and gas, commodities trading, textiles. These are the kind of the main industries that we try to avoid. Entertainment industry, I mean, there would be no reason as to why we wouldn't be able to finance a client within that sector. So and that's, I mean, that goes for all our products, not just microfinance.
Thanks for answering that. Another question is, why are the repayment terms only 4 months?
So yeah, that's a good question. So I think that's something that we are exploring. I think if you look at microfinance around the world, the way that the traditional financial, well, I guess the way that the product is traditionally structured is with a shorter tenor, and that's because you want to try and because again, the fact that we sit in the middle, we have two clients, we have the SME and we have the investor. So from the investor's perspective, we try and limit risk by how long the cash is out for. Now, you could argue that, okay, well, if it's a smaller tenor, that means my monthly installment is higher, so therefore the risk is greater. That's something that we're constantly trying to balance. So originally this product was for 3 months. You see the same thing in the buy now, pay later space as well, in the retail lending. Originally, the offering was for 3 months. Now it's, Tabby and Tomorrow, they're all doing 4 months. It's just, I imagine we'll go through the same evolution, which is that as we kind of get more and more comfort with this product, we kind of expand the tenor. But the main reason is just that we want to try and limit, excuse me, we want to try and limit how long the cash is out for, and in doing so, reduce the risk to our investors. We very much dictate our financial structures based on the risk appetite of our investors. And currently, we didn't see much appetite for the investors having the cash out for a microfinance product greater than 4 months. But I imagine with more track record, more success stories of loans being repaid, all of our cases so far in microfinance, touch wood, have performed very strongly. So I think with increased investor confidence with this product, we'll look at opportunities to increase the tenor of the product.
All right, yeah, thanks for that. There's another question here is, someone wants to clarify for the microfinance option, the factoring is 1.1. Does this seem quite high for a repayment term under 6 months?
Yeah, I mean, I think the products that we were coming from were term finance loans, where we offer we're one of the cheaper options financially with our existing product ranges. So the two flagship products that I mentioned originally, we are cheap in the market, and in the sense that we are incredibly competitive from a price perspective. So for us going into the microfinance space, we're used to offering finance that is significantly cheaper than what microfinance is charged at. And so coming into the market, I originally also was surprised at the rates of microfinance, and then just speaking purely transparently, though, I mean, for microfinance products to work with the risk associated to it, our investors are happy with the term finance, the working capital product. So for us to make a microfinance product to a smaller SME attractive, we have to reflect, which is from an investor perspective, is seen as higher risk. We have to reflect that risk in rates. Now, like I said, we're in a learning curve. We don't know if we're going to end up at a factor of 1.1 long term. I know that most other microfinance providers in the region are offering a similar sort of factor. Some are slightly more competitive, some are the same. And I think because we are in the exploratory stage, we're still figuring out where exactly we want to sit. Because we want to be accessible, we don't want to be outpriced in the market. So currently that is the rate that we see. And I mean, comparatively to the TF product, it is seen, if you look at the exact percentages, it does look expensive, but the absolute amounts, the way that we kind of think about it is that from a microfinance perspective, whilst TF or our term finance product, our longer term products, can be used more for operational expenses. So most likely the monthly installment cost will go into the operational expenses, where a microfinance product, the way that we would like it to be used is almost like a capex. It's almost like, what do you have? It's an expense you're taking on to generate more revenue, and without that expense, you wouldn't be able to generate that revenue. So that's normally why microfinance products are charged slightly higher, is because they are used as direct cost of goods sold or capex, whereas term finance is more likely to be used for something that is to support general working capital of the business over a period of time. So, but like I said, we're learning along the way, and we're kind of looking to take market feedback to see where exactly, from a pricing perspective, we want to sit with this product. Right now it's 1.1, but like I said before, we try to be as reactive to the market as we can.
Thank you. We have another question here. Is would there be a facility for microfinancing for SMEs looking to import goods into the UAE based on invoices for suppliers globally, like TR facility, as banks within the UAE require large account values?
So no, I'm just reading that as well. So will there be a facility for microfinance investors looking to import goods into the UAE based on invoices from suppliers globally? So again, I think so if you're looking to import goods into the UAE, so essentially you're looking to pay your supplier, which your supplier will be overseas, we don't necessarily restrict as to what you do with that money. Now, I think naturally, if, like I said before, if you're looking to take a loan because you can't pay your company's salaries, obviously that's an easy no for us. But if you want to use those funds to import goods, or buy supplies from a supplier that's overseas, or they could be domestic, they could be overseas. It's not something that we would necessarily restrict, as long as we see the repayment coming from the business as likely and the credibility is strong. Then we would be open to supporting those kind of businesses. Now, again, the current product is limited at 100,000 dirhams. So a lot of the time, overseas suppliers, the request we get for overseas supplier finance is for greater amounts. We do also offer a product called supplier finance, which is a revolving credit facility where we finance kind of purchase orders. That's a slightly different product that we also offer that businesses use to finance supplier payments, whether that be domestic or overseas. But from a microfinance perspective, there's no restriction on finance on the use of funds going overseas or anything like that.
Great, thank you, Jason. All right.
Sorry, Yoshi, I just also want to touch on the last part of that question as well. As it says, they require large account values. So again, that's the idea of this product, is to try and make it as accessible as possible. So we don't put any kind of restrictions on you holding a certain balance in your account or anything like that. We try and remove some of those banking restrictions as much as possible.
Great. So yeah, thank you, Jason, for giving us your insight on microfinance and explaining what Beehive has to offer for microfinance. And I also would like to thank you, everyone in attendance for coming and joining and listening to us discuss about microfinance. And we have the website to the we have the link to our website so you can learn more about microfinance, and also our email. If you have any questions, feel free to reach out. And yeah, thank you everyone for joining.
Thanks, Yoshi. Thanks, everyone.